Bill Gates has been selling his stocks to prepare for one of the worst economic disasters in history. I'm afraid that the bears on this one have a pretty strong argument. You avoid taxation or any sort of government rules about kidnapping fees or things until we get there, which we're absolutely not, he said. Gates is well-renowned for being a CEO, and he excels at capital expansion. Gates made $50 billion during the past 20 years with the aid of his fund manager, Michael Larson. Gates and Larson were successful in preparing for the dot-com bubble during the 2008 collapse, in addition to making billions during the bull run. Because of this, he has routinely outperformed the S&P 500 and increased his wealth. Gates and Larson are currently making active preparations for what will end up being one of the worst recessions ever. It goes without saying that the economy is struggling. The U.S. economy is dealing with historically low consumer morale, escalating inflation, the war in Russia and Ukraine, low consumer savings rates, and record-high debt levels. In 2021, the government will invest trillions of dollars in the economy. The exact opposite of that will occur in 2022. Gates is especially worried about the Fed's self-made artificial trap, given that the government is removing trillions of dollars from the economy. A two-edged sword is currently striking the economy. Accelerating inflation and the enormous amount of public debt are two sides of the same coin. Now the government must decide between destroying the US dollar and risking bursting the debt bubble by crashing the economy. The Fed has chosen to pursue its second option, slowing the economy at the potential cost of an epic meltdown. The Federal Reserve just increased interest rates by 75 basis points, the most since 1994. This boost significantly slows inflation, but it comes with a high risk. First of all, a sharp increase in interest rates will result in significantly higher borrowing costs for mortgages and company investments. The 30-year fixed-rate mortgage rates just experienced their biggest weekly spike in 35 years. The current debt bubble could burst, and the economy could enter a recession or depression if these higher interest rates cause the economy to grow too slowly. So a minor event has occurred since our previous conversation. It seems as though we have entered a new universe since Russia invaded Ukraine. For years to come, we'll continue to experience increasing energy and food prices. It's challenging to imagine how this will solve itself very rapidly. What does that imply for the near future in terms of the economy? The government debt levels were already extremely high, and there were already supply chain issues before the pandemic, so it adds to those issues. Therefore, it is likely to worsen the virtual economy's inflationary issues and push up interest rates, which would finally cause an economic recession. Therefore, I fear that the bears on this issue have a very compelling argument, which worries me much. The bear thesis that Gates is referencing is very logical. Oil price increases are closely tied to recessions. This graph's gray regions represent times when the U.S. economy was in a recession. You can see how a recession nearly always occurs after Brent crude oil reaches $100 per barrel. Since Brent crude oil is presently trading at around $120 per barrel, a recession is imminent, because rising oil costs constitute a tax on consumers. A recession usually always occurs after the price of crude oil breaks the $100 mark. High petrol prices directly deplete the wallets of consumers. In addition to giving the consumer less money to spend, this has a significant negative impact on consumer sentiment. According to the University of Michigan Consumer Sentiment Index, consumer sentiment is at its lowest point since the 2008 recession. The debt levels regularly peak and bottom out due to the cyclical nature of the economy. Gates and Larson are aware that the year 2021 was marked by a great deal of speculative activity. a significant economic slowdown, the exact reverse of this, is on the way. Gates and Larson have been putting several hedging plans into place in case the U.S. stock market crashes. One of these tactics entails selling short stocks. Short positions are not required to be declared to the public, in contrast to long ones. We don't know what equities Gate is actually shorting until the SEC's latest plan, which is intended to remedy this, is approved. Having said that, Elon himself revealed that Gates holds a short position against Tesla shares. Gates advertises himself as a big proponent of green technology, but Musk feels that this is in conflict with his Tesla short position. Let me know in the comments if you have any other questions about investing. Let's return to the video. Gates is already down over $1 billion on his Tesla short position, but he clearly hasn't closed out his position yet, as Musk stated in a tweet. Since Gates still has a multi-billion-dollar short position against Tesla while claiming to help with global warming, I guess I have some trust issues with him too. Elon revealed that it was originally $500 million, but Tesla's value increased significantly after that, increasing the closing price to $1.5 to $2 billion. A meeting between Gates and Musk to discuss philanthropy was scheduled, but leaked messages indicate that Gates' short position in Tesla prevented it from happening. Elon texted back, "Great, do you still have a $500 million short position against Tesla?" To which Gates replied, "Sorry to say I haven't closed it out. I would like to discuss philanthropic possibilities." Gates then texted back, "7:20 on Wednesday to be clear." Elon replied, "Cool." Although the price of Tesla shares increased significantly in 2021, the growth of NFTs was the pinnacle of the bubble. NFTs like the Bored Ape Yacht Club experienced hundreds of % growth before recently experiencing a loss of more than 80% in just 2 months. Although the Ethereum network has long-term potential, there is no justification for ape images to be worth hundreds of thousands of dollars. Recently, Gates blasted the Bored Ape Yacht Club for being non-utilitarian. I'm not sure. Obviously costly, digital photos of monkeys will make the world a much better place. We all concur on that. And that, my friend, is just amazing. Anyway, I'm used to asset classes where a corporation that produces goods, like a farm, has an asset class that is entirely predicated on the bigger fool assumption that someone else will pay more for it than I do. And at its core, it sort of relies on your anonymity to avoid paying taxes or adhering to any kind of kidnapping-related regulations. I'm not involved in that, though. I'm neither tall nor short. The S&P 500 is still over 15% than its pre-pandemic peak while I'm making this video. Gates doesn't think that is the case. Before the pandemic, the economy was substantially healthier. Both the supply side and the consumer market were booming. Both consumers and producers are seriously impacted by the pandemic. Economic activity cannot be simply increased to pre-pandemic levels by printing money. The pandemic's economic effects are still being felt today. The fear of this sickness has completely altered people's behavior in terms of their desire to travel, attend activities, or simply visit a restaurant. Therefore, unless we can assure people that we are closely monitoring this situation and that coming to your job, a car factory, is safe enough for us to feel certain you can do those things. Nobody should believe that the government can wave a magic wand and suddenly the economy is anything like it was before this happened, until we get there, which we are definitely not doing now. That is either awaiting a miraculous drug with a cure rate of over 95% or widespread vaccination. And so, as you may be aware, there has been both a demand-side shock and a supply-side shock. The demand-side shock is mediated by both the fear of infection as well as the overall wealth effects of many people losing their jobs and an entire industry operating at a much lower level than in a normal economy. Gates believes that the pandemic is still ongoing in addition to the unstable state of the economy. According to Gates, there is still a chance that this pandemic could evolve into a version that is significantly more transmissible and lethal. We not only have high inflation and liabilities, but also a pandemic that might become worse. As he further emphasized, it's not likely. I don't want to be a voice of doom and gloom, but it's much above a 5% possibility in this pandemic. We haven't seen the worst of it. The U.S. is at risk of a terrifying economic and social crisis as a result of all these causes together. Gates said that his area of expertise in investing is in producing assets, but in reality, he has been selling these assets. He sold millions of shares in numerous companies. According to his most recent quarterly statement for the first quarter of 2022. Over 1.3 billion USD from Berkshire Hathaway were included in this. Caterpillar stock worth more than $500 million among many other equities. We must examine Michael Larson's approach to comprehend why Gates is selling his investments. Larson is the mastermind of the enterprise. He is an expert at maximizing alpha, also referred to as the risk-adjusted return in the investment world. Despite the market's severe collapse during the 2008 crisis, Gates' net worth only slightly decreased, according to those close to him. Despite the fact that Larson has kept his technique a secret, we know from public documents that he mimics Buffett's investment approach. Looking at the investments in Gates' portfolio, it is clear that the majority of the businesses would not be affected by changes in the economy. Waste Management shares, which Gates holds for $3 billion, is one example of this. Because the stock market is down 50%, nobody is going to quit dumping their trash. Diversifying into several asset classes is another aspect of Larson's method. Due to strong alpha and diversification, Gates is the largest U.S. private owner of farmland. From 1991 to 2018, the average return on farmland was over 11%, with no years experiencing a loss. This is so because people won't stop eating during a recession. Because farmland offers substantial rewards with little to no risk, it might have a high alpha. Larson is renowned for investing in non-traditional assets, like private equity, which entails acquiring privately held businesses. Private equity is a market that is close to individual investors like you and me, much like farmland. Private equity, on the other hand, is for Gates a great opportunity to diversify and further hedging his portfolio. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.